The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. We got about 54 minutes until Chairman Powell begins speaking. Jackson Hole, about 10 a.m. Eastern Time. His remarks do become available prior to that speech occasionally. We'll look out for those throughout the hour. But nonetheless, you got markets clawing back some of the losses of yesterday. S&P's right now up by 35 points, and you see the action. We trade lower right into the close yesterday, and then it's been a slow crawl to higher prices right now in that market, with the S&P's up by 35. NASDAQ 100, we're up by almost a full percentage point, 19,766. You see the run from lower prices near the close as well. You get the Dow right now. Dow almost gets it all back from yesterday. You're up about 0.5%, 196 points. Trading right now above 41,000 in the futures, 41,022. And we got the Russell up by 15. Bitcoin up almost $1,000 at 61,250. Crude catches a small bid. We got a 71 handle Wednesday. We had higher prices yesterday to the 73 range. Today we're trading at 74.14. And you got gold clawing back some of those losses as well. Gold trades lower yesterday, approaching 2,500. Just like that, we're positive by $18. We're up to 25.34 right now in the price of gold. And on an important day for Chairman Powell, we take a look at notes and bonds, and pretty calm action right now. We're up by 4 ticks, 113.14 in the 10-year. The 30-year is up by 11 ticks at 124. We jump over the dollar index this morning, settling right at about 101.48 right now for the dollar index. All right. And where we're going to go, let me pull this one over here. And we're going to go to the headline that says it all. The main event today, Jackson Hole. What to expect? And what to expect is you got Chairman Powell speaking at 10 o'clock on Friday, and nobody knows what he's going to say yet. That's all you need to know on that one, man. My analysis is that he's going to wait for the data. They got a whole nother jobs report coming out September 6th. But it seems like they're ready to begin cutting, but all the talk of 50 basis points seems a little bit overreaction in this market right now, as you have a pretty resilient market, all things considered. We have stocks sitting basically near all-time highs. We have the unemployment rate sitting at, 4.3%, something to that degree. And we have the Fed that is about to begin their cutting path, but how fast they go, how deep they go, that's going to be anyone's guess. But this market getting a little bit ahead of itself when you think about the fact that right now we're sitting on a 10-year yield of 3.83. Okay, and it might not be getting ahead of itself, but where is your risk reward in this market where there is already a dramatic amount of cuts priced into this market? And it is interesting when you take a look at the 10-year in terms of where we are. You got to go back to any time before 2007. Basically, and yeah, we've been under there briefly as we've been battling inflation, and the Fed has had interest rates. We had the 10-year approaching 5%, right? But boy, we were stuck in a bond that was near zero for an extended period of time. You get the 10-year at 113 right now, and outsized of our last couple years where we've been battling inflation at 5%, we were lower for a period of almost 20 years, which is pretty remarkable when you take a look at it in that accord. You take a look at the 30-year, which goes back a little bit further. And again, similar story, right? You back this up. We chopped around where we are right now for a while, but we were on the zero bound for a long time for short-term interest rates, and we're sitting at 124. And are we going back to that area, or are we going back to higher for longer? And the reason why I bring it up is everyone has the recency bias that we're going back, right? We're going back to where interest rates were that we were so used to. We're going back to where everybody can get a car loan for 0% down for 5 years. We're going back to where we can get mortgages at 4 to 5%. I don't know if that's going to be the case, and we're about to find out. And that's why it's going to be especially interesting volatility-wise in this market. As is that really going to be the case? Well, we're going to find out a lot from Chairman Powell, but he's going to rely on the data, and he's probably going to talk about they have one more data point. He's not going to be concrete one way or the other when you get a full data point, something like the non-farm payroll number coming out September 6th before they come out later in the month, September 18th, I believe is their meeting. So we'll see where they go from there. But we'll keep our eyes open in terms of when that speech potentially hits the market. All right, what else we got going on? So we talked a little bit of Fed. He begins talking at 10 a.m. This one was an interesting one from the Journal, talking about the 60-40 portfolio, and it does tie into rates, of course, okay? And what they talk about here is that there's still a dramatic risk, and we saw it play out in 2022, right? The 60-40, 60 stocks, 60% stocks, 40% bonds, and a 4% withdrawal rate is something that usually is supposed to prevent financial ruin. And it is interesting when you take a look at some of these years and where you're coming from. You got 1974, the worst year out there. And the reason why was because you had stocks down over 20% and you had bonds down about 3% at the time, okay? It was a 60 portfolio's worst year after inflation since 1974 was 2022, when bonds were down 9% and you had the stock market down 13.8%. You back it down to the other two, and it was all stocks, right? And then you go to the best side. The best side was pretty much all stocks, and then you had 1995 was a banner year for bonds when you had 8.2% capital appreciation. Let's back this up real quick. I'm curious. $19.95. We don't quite get there. This chart starts in 96. All right, on the 30. I was going to take a look at what bonds and notes did in that 1995 year. But what they talk about here, lower bond yields, okay? The lower bond yields are, when stock swoons begin, the less potential bond prices have to rise in a sharp economic downturn. Okay, if a recession causes yields on a 10-year treasury to drop 1.5% today, then their price would rise by a fifth. Back in 1974, a plunge to the same yield would have spurred a rise of around 50%. And what they're pointing out here, okay, is that when you look at where we are in terms of yields, we're sitting at 3.8% right now, folks. Okay, so you want to be careful here that if you really get a pullback in this market, I think that bonds are not going to save you. And you just want to be aware of that, even in a 60-40, okay? And we could spend a lot of time on this article. I'm trying to, but it is a tried and true, okay? You take out 4% of your retirement account, and you're supposed to be protected in the long haul as a retiree. But that's why if you've run this market up, folks, all right, and this is not trading, it's retirement. We'll talk a little bit more about it when we get back. But if you have run this market up and you don't think there are risks in this market when it looks like this, from 3,500 to 5,700 over the period of a year and a half, we better get ready for it. We'll talk about that when we get back. We got a lot to talk about. It's Fed Day, folks. Jackson Hole. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
There's no better time than now to sign up for Live Trading Fridays. Why is that? That's because the next trading session, this Friday, August 23rd, coincides with Jerome Powell's Jackson Hole speech. Chairman Powell's comments have the power to greatly move the market, and Larry is ready to capture those gains on the moves. Use code LarryAUG24 at checkout to save $50 off your first month. See you there, Tigers.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&Ps right now up 35 points. NASDAQ 100 up 198. Dow up 192 right now. The market awaits Chairman Powell in about 40 minutes. And yeah, just jumping back to that article. So what it was talking about here, all right, is just how things can always change. You know, that boilerplate warning, as they talk about past performance not indicative of future results. I bring this up because it's something I was always thinking about. Because, man, if you were putting money in a 60-40 portfolio when interest rates were near zero, that was quite a risky proposition when you think about where things could go. And it just kind of talks about here that, yeah, the rule almost always worked over a period when a 60-40 portfolio earned an average of about 9% a year or 5.8% real return after inflation. Not bad, right? But then what they get into down here is that they talk about, here you go, a recent academic paper that looks at 38 developed countries. Now, the U.S. is not a developed country in that same essence, right? It's not Japan, Sweden, or Australia. But don't assume that over the next 20 years it's going to have the same type of growth that it has when you're talking about something as crucial as a retirement nest egg in that degree, all right? And this is, we all have relatives, parents, whatever it is, are retired. A retiree who wants no more than a 1 in 20 odds of financial ruin should withdraw just 2.26% a year. Put another way, a 1.5 million nest egg should take out 34 grand in their first year, not 60 grand. Quite a difference when you put 2.26 to 60 grand, 1 in 20. So maybe you have your house in the backdrop or something like that. You got a retirement nest egg, and then you have the house. If anything happens, you can always take a loan out on that. But just be aware that these things are out there, because what do they talk about here? Well, they talk about Social Security might have some problems coming down the line in the next 9 years. They talk about the facts that we have the interest rate bill, right? The deficit, inflation, maybe higher inflation going forward to that degree, and how that's going to affect growth, how that's going to affect yields, and how that's going to affect returns for a bond portfolio that may be inching towards higher for longer. And higher yields, folks, mean lower price when you're holding bonds. Okay, remember that. If yields go higher for longer and you're in fixed income, you're losing money on the capital of that because the price is going down. It's intriguing, especially from where we've been. And yeah, listen, a 5-year CD right now is still yielding about 4%. Not outlandish if you've run this market all the way up. I mean, I was having the conversation yesterday, just reminding people, you go back to where we were in 2006, which doesn't seem that long ago when you think that that's when Trump was elected. He beat Hillary. The market was at 2,100, folks. And remember, at that point, yields were very, 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 very low. All right? I forget what they are, but they were super low. The whole argument had been made that, hey, we're at 0% even though this market is rocking and the Fed couldn't get out of it, right? You had a little bit of a taper tantrum. I think that was towards the end of 2015 when you traded about 2,100 down to 1,800, right? Small numbers, percentages on small numbers. Well, that was a 15% decline. Think about that, right? When you're at 2,100 and you drop 300 points, that's almost a 15% pullback on that taper tantrum. Market was at 2,100. You're at 5,600, let alone the NASDAQ 100, man. You overran that thing up. You were trading at 5,000. You're at 20,000. Okay, NASDAQ 100 comes into that 2016 election 8 years ago at 5,000. You've quadrupled your money over that period of time. So just be careful. If you're out there, if you're managing money that you're not going to get back out there, if you're in retirement, you got parents in retirement, there's nothing wrong with lightening up some of the equities, because think about it, right? This is one thing you think about. Right now, you can get 4% risk-free on a CD. Well, if you're pulling out 4% a year, okay, you're guaranteed to not even touch your capital over a period of 5 years. That's a pretty cool proposition if you've run this market up and you're pretty comfortable where you are, right? Do you need to actually have exposure to stocks, or would you actually be okay with a guaranteed? Now, the risk there, all right, you take a CD out, the risk there is your reinvestment risk. Now, I'm going big picture, broad planning, but that article got my brain going here. All right, the risk if you take a 5-year CD right now is, what do you do when those CDs come up for renewal and the CD rates might be back to 1% to 2% if this market is in trouble and the Fed cuts and rates go back to a much lower range? That's your risk. Well, some people might be okay with that risk versus a risk of being heavily invested in a market that's doubled in price over a period of less than 2 years. Because you better believe we got some volatility that potentially coming down the line. This market's pricing in cuts. We're going to find out from Chairman Powell what he thinks about the market and what it's pricing in. But just keep your eye on it, because we are starting with yields at only 3.8% right now. And so the worry is, if things really start to get in trouble, yeah, I guess you can cut pretty dramatically. I mean, the Fed really brings it. You can get some capital appreciation in notes and bonds, right? They really brought it during the pandemic, and you have the 10-year on a price level go all the way up to 140. So you would get some support there. But we'll see where we go, man. All right, let's jump around some of the magnificent equities as we kick things off. You got everything in positive territory. NASDAQ 100 is up a full percentage point. You got Amazon up about $2 to 178. Quite a slide from them, from 181 to 175 yesterday. The big dog, Apple, they're higher to 226 this morning. You jump over to Microsoft shares. They're trading at about 417. Look at that fall off yesterday from Microsoft, from 426 to 414. Watch out. Meta shares up to 537. We check in on Tesla. Tesla up to 213. Take a look at Uber. Excuse me. So Uber last night, they come out and they got a deal going on. Yeah, they're going to bring automated vehicles to their platform. It's happening, folks. If you weren't ready for it, get ready for it, because it's happening. They're going to deploy autonomous vehicles, and they're going to do it with a partnership with Cruise Autonomous Vehicles. And it seems like once it's happening, that you're going to have an option to have your trip fulfilled by a cruise autonomous vehicle. Now, I don't know where this is going to start. This was announced last night, but autonomous vehicles are coming down the line, and it seems like it's going to give you an option if you're in that area where they got cruise autonomous vehicles, but it's a multi-partnership deal. It's going to launch in 2025, and they're going to be deploying Chevy Bolt-based autonomous vehicles on the Uber platform. So you're going to have it's coming. You're going to be able to call your robot-controlled car. What were we talking about? We were talking about drones yesterday, right, that are coming down the line. Exponential growth in technology, folks. It's tough for our minds to imagine and wrap your brain around exponential growth, and autonomous vehicles are coming, but the market, I don't know. I don't know what's going on with that market. Maybe somebody can help me out. We get back to 72.40. The market wasn't too keen on that idea. For some reason. We'll take a look at this when we get back. We're coming back for the opening bell. Should be an interesting one, folks. Inching towards that 10 o'clock number. We'll be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps right now up by 31 points coming into an important session. You heard the ads out there, folks. You can still get into it. Larry Pesavento, he is out there live trading. He's got the crew in there. They're in there. They're in the special room we got set up in the Tiger's Den. If you do want to check that out, you can still sign up. You can save $50 by using the code. It's right on the front page of TFNN, folks. And yeah, we got a positive market, but I imagine the fireworks have not quite started just yet. And that's not too much volatility. That's just a one-way inch forward. We got markets open, and we'll see where we go from there. As in, we're going to get a pullback here? I don't know. Pretty interesting that you trade so much higher into that market when we haven't got anything to do with what's going on yet in terms of Chairman Powell and his words. All right, in Europe right now, you get the DAX up 0.5%, FTSE's up 0.3%, CAC rolls up by about 0.3%. Over in Asia, you have the Nikkei up by about 0.4%, Hang Seng down by about 0.1%. And yeah, not surprising when the market actually opens that you give back some of what we had going on. We trade higher, and we give it back slightly. Market up 26 points right now in the S&P. Finishing up that conversation that I found talking about the time-honored 60-40. This is about retirement, okay? And it's about retirement. I just wanted to stress the difference here. You know, for my retirement account, folks, it's basically all in growth stocks, all right? You want to make sure that you're protected against that we might be in a higher for longer. And if you got 40% of your equities, your capital in notes and bonds, the 10-year is earning 3.8% right now. And what if we come into an area that we're dealing with inflation of 2.5%? Well, if you're getting 3.8% and inflation's 2.5%, you're only getting 1.3%. Yeah, not exactly the case that you want to look for. So, you know, you got a lot of time on your hands. I wouldn't be as worried. But if you're dealing with a retirement situation where you're no longer making money, you have your nest egg, you're planning for 20 years of retirement, and you want to make sure that you're okay, just be aware that nothing is guaranteed, okay? We're facing where you could have some steep pullbacks, man. The NASDAQ 100 just doubled in price over a period of a year and a half. Don't think that somehow you're immune from a dramatic pullback in that, and it's worth stating for what it's worth. All right. What else we got going on? We got a little Fed speak from Atlanta Fed President Raphael Bostic. Where is he? Is this the one? Nope, that's not it. This is the one. Yes, it is. This is out in Jackson Hole, of course. His words, it may be appropriate to pull forward our first rate move, he said. Asked if he favors more than one cut this year, he said it is in play. I mean, think about the different verbiage of what you're asking Fed officials versus what the market is pricing in right now. The market's pricing in like 4 cuts this year. And all he's willing to do is say that it's in play, that multiple are coming. We're going to get a lot of data by the year end. I think it's assured that you're going to see a September cut of 25 basis points unless you get some shocker report in September for the August move that really freaks them out somehow. Yeah. All right, let's jump over to Japan because we got a little Japan this morning as well. Yen climbs as Ueda indicates that rates can go higher in Japan. Yeah. He also said they weren't to blame for that little gyration on August 5th. I mean, nonetheless, they're really not to blame, right? But hard to argue that they weren't an impact of what was going on there. But we got the yen right now, 146.28. You see a little bit of a pop shorter term. Not a huge reaction, though. Right? You see a little bit of volatility last night. We're back to 146.30 right now. And yeah, so you're up a bit. He said that policymakers can add to hikes made in March and July if the economy and prices are in line with expectations. Concerns about the U.S. economy when asked about the turmoil, while noting that he remains cautious about the instability of financial markets. He's trying not to rock the boat. Yeah, I'd say so, man. I'd say so. Effectively confirming that policy normalization will not only proceed, but still has a ways to go. And yeah, that's a guarantee they got a ways to go. Folks, look at this chart, okay? This goes back to 1990. And you just inched over that level, and then finally we get a sell-off. I mean, you got to love technicals, right? You look at this chart, okay? And if you were looking at this chart, you'd say, where's the next area you might get a little resistance? This one's just sitting out there. And where did it trade to? Almost to the penny, man. Where's that high? That high was 160.35 back in April of 1990 when I was 10 years old. And we got up to 161.94. And then we're back to 146. The point being, they have some normalization to go. Okay, that is an extremely weak yen, and they've been at 0% forever, as everybody else has come off the 0% bound to deal with inflation that they have not had to deal with. But yes, it would make sense that they're going to normalize for a higher interest rate policy that's going to strengthen the yen and bring this number back down. And when you look at the longer term time frame, right, we're sitting right at the upper boundary, man. Pretty remarkable. You were at 75 12 years ago. I mean, think about it. That is the wealth of the Japanese people across the globe getting cut in half, right? The yen was at 75. No, just like that, you're at 150, let alone where you were. I mean, that's a long time, 12 years, okay? But in 2021, you were at 100. You went all the way up to 160. Yeah. You want to visit Japan? Go get it done right now, or go buy some yen right now, because your risk reward on a longer term basis is that, yes, we get some normalization, man. We get the Bank of Japan hiking interest rates at the same time as you have us cutting, and that's going to cause the yen to strengthen. It's going to cause the dollar to weaken. And yeah, so risk reward wise, go check it out. Japan is an amazing country. I've told my story. I've had just an amazing trip over there when I was 16 for an exchange trip, spent 30 days with the family, and go play some pachinko if you get over there and have some fun too. Why not? You got to love it, man. I remember 16 years old over there playing a little bit of pachinko in Japan with my classmates. Talk about an experience. All right, we get the market holding up pretty well right now. What else we got going on in this market? Let's jump around. Let's see what I got pulled up here. How about cars? Yeah, this one's an interesting one. So, cars. Not quite the summer market that maybe some car enthusiasts were hoping for, but they're talking about in this one, classic car sales stall in Monterey auction as new generation takes charge. And what are they looking for? They're looking for cars in the 80s, 90s, and 2000s. Those are the classics now, folks. Yeah. You want to hear something bonkers? If you have, I heard this the other day, it doesn't have to do with this article. If you have a year 2000 vehicle, you're going to qualify for antique tags coming up in 4 months, because I think it's 25 years that you got to be. So all you need is a year 2000 vehicle, and you're going to be rolling around with antique tags. Now, 25 years is a long time for a car, but you get the point. Holy crap. The year 2000 gets you into an antique vehicle. But what they're talking about here is the shift from older to newer cars left a pileup of unsold classics from the 50s and 60s. And yeah, what they're looking for is they're looking for cars from the 80s, 90s, and 2000s. There's a supply. There's a supply of those cars from the 50s and 60s. Everybody wants something special. But economy-wise, pretty interesting. These car sales doing $392 million, same number you were doing in 2015 as that market has stalled a bit. Stay tuned, folks. We're coming back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P basically sitting right where we kicked off the session. We got 18 minutes till Chairman Powell takes the stage in Jackson Hole and makes some waves for this market. And we got the NASDAQ 100 pulls back slightly. Dow up 195. Russell catches a bit on the open. Check that out. We're up by 24 points, 1.1% to the upside right now. Crude sitting at 74.25. And we check in on that gold contract up by about $15, but we pull back a little bit this hour. We're almost at 25.40. We're trading at 25.32. We check in on yields as we come into the main event of the week right now. We got the 10-year sitting just above, right? Where are we sitting right now? I think we're just above 3.8. Let's get the number as we come into the speech. 3.844, so almost 3.85. The yield right now on that 10-year, we're positive by 2 ticks at 113.12, and we check in on the dollar index with the dollar trading a little bit higher at 101.51 on that dollar index. All right. Last part. This article intrigues me because it's longer term probabilities, it's statistics, it's variance, right? And that's one thing that you don't understand is that you want to take out the variance, especially when you're in retirement. And the one last bit of this article that if you put $100, and this kind of speaks to if you're not in retirement, right? And you can take the volatility and you can take the variance, probably makes sense to not be in 40% of bonds. But all things can change, okay? Especially right now. Where do you get into those, though? All right, if you're getting into the NASDAQ 100 when you're at 20,000 and you were at 10,000 a year and a half ago, what are those returns going to look like for the next 4 or 5 years when you're getting in after the market has almost doubled over a period of 18 months? But overall, if you invested $100 in the stock market 96 years ago, it's a big number, but nonetheless, in 1928, that $100 turned into $787,000 by the beginning of this year. Exponential returns, folks. They add up. You talk about it. That number is more than 100 times more than if you had owned T-notes, okay, and 350 times as much as short-term treasury bills. Yeah. So 100 times more than notes, 350 times if you were just really on the short end of the curve, and stocks 100 times or even 350 times, 100 times greater than what you were returning. Now, that's over 96 years. It's over exponential returns. They're adding up, but you do see the difference. So if you got 20 or 30 years left in your retirement, don't be afraid to be in some equities, okay? But be wary of that one. I know I spent a lot of time on it this morning, but, always be willing to question the standards because nothing's guaranteed, man. I mean, I think back to when, think about it during COVID. We all heard the stories of people who unfortunately were afraid, let fear get the best of them, took their money out of the market as you started to sell off, put it into notes and bonds. And what happened? You took your money out of the market and you put it into notes and bonds. And what happened? The market took off. And what happened to notes and bonds? Well, you put it into notes and bonds at a time. I mean, this is why banks went BK. They did the same thing. They got a generational amount of deposits because of COVID, because of stimulus. Silicon Valley Bank, they took that money, they put it into long-term treasuries that were getting like 0.5%. And then they had unrealized losses to the degree of 10, 20%. And it happened. So be careful out there. Nonetheless, we jump around. S&P's up by 32 points. Jumping back to that car article. Where was that one? Yeah. So this is interesting. So 1,143 cars up for sale. 821 sold. That's a 72% sell-through rate. Average sale, 476K, just below the average sale of last year. What is interesting is, I wonder what the median sale was, because you have the average dramatically skewed by a few gems that occasionally sell at some of these car shows out there. One of them being, where are they? They had a gem. Yeah, check out this one. This is the second gem they had. 1938 Alfa Romeo 8C 2900B Lungo Spider. I mean, imagine rolling around that thing in 1938, man. They talk about this car was just a beast back then in terms of what it could do, Alfa Romeo in 1938. But the big seller for the summer was a 1960 Ferrari 250 GT SWB California Spider that sold for $17 million, and then this one was the runner-up. This is only one of 5 in existence of that Alfa Romeo. Pretty ridiculous in a great way. Yeah. But yeah, so they're talking about that they want, and there they are. The Alfa Romeo sold for $14 million. So look at how, they talk about the average sale. Well, the average sale is all going to be determined by the 10 biggest cars that sell out there. 17 million, 14 million, a 55 Ferrari Sports Spider for 13 million. But it is interesting that what they're talking about is, the ones that are selling for 17 million, yeah, they're still the classic. There's only 5 of them made in 1938, etc. But when you're talking about the cars that are actually selling, there's a shift here. The 80s through the 2000s, okay, that index is up 60% from 2019. Yeah, well, the index of 50s and 60s cars is down 3%. So if you're in that market at all, demand is shifting. Yeah, you got Gen Xers and millennials preferring cars from the 80s, 90s, and 2000s, which you wouldn't exactly, that's what time is marching on, man. All right. And we got about 10 minutes till Chairman Powell. We get the markets chopping around at 56.28 right now. We check in on some of the equities. Yeah, Uber gets back some of that. I was surprised. If somebody's got it in the den, I mean, why did this thing trade lower on that news? That's pretty exciting news. I don't know what the news is going to be there. Let's see. They maintain a buy, 88 price target out there on Bank of America. Yeah, it's all about the cruise announcement that's going to happen next year, and that's going to be here before we know it. We're almost into September, and in the year 2025, you're going to be able to pull up your Uber and potentially jump into an autonomous Chevy Cruise vehicle. So Uber and GM enter that partnership for autonomous vehicles out there, and that's going to be everything, okay? Think about it. That's going to happen with food as well. I wonder how that's going to tie in, right, as it begins in 2025. But maybe they just begin it with rides. I don't know. It would make sense that. Are you beginning it with rides? Are you beginning it with food? How is that going to play in? I would love to be in those conversations for some of these ride-hailing companies. And yeah, they're going to have some issues here in terms of, the roads are dangerous, man. Wear your seatbelts out there, folks. Be careful on the roads. Unfortunately, there's people that die every single day in car accidents. We all know this, okay? But I say it because even with autonomous vehicles, right, there are going to be, unfortunately, accidents. There's going to be deaths, and it's going to be a battle for these companies to overcome the trust that comes with that. Yeah, check it out. 40,000 people died in motor vehicle crashes in 2023. 40,000 people, almost 41,000. And that was under the number of 42,000 in 2022. So there are safety strides that can be made. It'd be interesting to see how it happens. But the point is, you're going to need trust. You're going to need trust because those problems are going to occur. And how's that going to shape Tesla? Because trust is a tough one for Tesla. But nonetheless, Tesla up by 3%. One more segment. Don't go away, folks. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got S&Ps up by 33 points right now. We jump around to Walmart. So Walmart, they got a deal going on with Burger King out there. Interesting how they branch out in terms of Walmart Plus and how they build that out. Where am I? Forgive me. Come on. That's not it. Is that it? There it is. Walmart adds Burger King benefit to its membership program. So if you join Walmart Plus, you already gain access to Paramount. It's $12.95 a month. It's on $98 annually. Includes free shipping and delivery on Walmart orders out there. And now you get 25% off any Burger King order made through the Burger King app. Interesting, right? Burger King wants people on their apps. I wonder what the back-end deal of something like this would be in terms of that is a huge advantage. McDonald's does a great job with their app. You see how Starbucks has just done tremendous things with their app. And, yeah, they want people on their app, and they're trying to gain access to the customers that Walmart services, and they're offering 25% off Burger King made through the BK app. If you join Walmart Plus, members are also eligible for a free flame grilled Whopper every 3 months starting in September with a purchase. I mean, there's small details, but if you're joining Walmart Plus anyway, you do gain access to Paramount Global. So if you're thinking about signing up for Paramount, folks, at any point, consider signing up for Walmart because you get Paramount for free. It's one thing I was looking at a while back, which is why it struck me. But yeah, Walmart's been on a tear recently. You had decent earnings for Target coming out this week, and you got Walmart. Look at that chart, man. All right? They are just a behemoth, pushing $75. Look at that. It's been on a one-way trip since they came out with their earnings in May of 2022, almost doubling in price. This market's just on fire. On fire. All right, folks, it is 9:56. Chairman Powell begins speaking in 4 minutes. I'm going to come back for the 10 o'clock update. We'll go through that. We'll see if we get some action as he begins. And we got markets awaiting the chairman with positive prices with the S&Ps right now up by 32 points. NASDAQ up by 170. Dow up by 168. Russell up by 17. Appreciate you joining me. Kicking off the trading session on Friday, folks. Stay tuned. It should be an interesting one. And I'm coming back for that 10 o'clock update. We'll be right back, folks. Have a great Friday, everybody.